Lovely to be with you today. I've got a green lanyard on. That is an invitation for a hug, if that's what you want. Hi, my name is Mohanty, and I am the CEO and co-founder of Money. I have had the great fortune of working at a bunch of really interesting companies across many fintech companies. In short, I really, really love fintech. I live it, I breathe it, I am fintech. I think it's safe to say, as the S&Ps just shared with us, that we have come a long way in the past decade. In fact, I think it's fair to say that fintech as we know it is all grown up. We've seen companies raise huge amounts of funding. We have seen companies recently go public, and we've seen fintech companies around the world, as far as India and Brazil, but as close as Ireland and France. So it's been a very, very exciting time. We've also achieved so much. We are now more than just a really cool debit card. I bet a lot of people in this audience have a hot coral Monzo card, maybe? We're more than that now. We've done so much in making processes like opening a bank account very simple, with identity verification and KYC processes streamlined. I can now open a bank account from the comfort of my sofa. And we're doing so well, actually, that in the first quarter of this year, Starling Bank topped the charts of the current account switching scheme, with 17,769 accounts switched over to Starling Bank. Not bad. And I'm going to just take some credit for that as well, even though I've not worked there for years. We have also seen great progress in making pensions sexy. The team at PensionBee have been heads down, making our lives easier and our futures brighter. In fact, as of July 30th this year, PensionBee is not only public, but also has £1.99 billion under management. And we've democratized investment and trading. Now you can buy and sell shares of a company from the comfort of your own home. So we can watch Disney Plus and own Disney shares. Win-win. We're also reaching new customers. So Free Trade, pictured here, did a survey and found in April of this year that almost 25% of their customers are now women, which is great news. And 55.72% of those women were millennials or self-proclaimed first-time investors. So that is not too shabby. But we have a long way to go. You've probably heard of Geoffrey Moore's tech adoption lifecycle. If you haven't, crash course, Mr. Moore separates the overall population into groups based on their characteristics and their behavior towards adopting new technology. The goal, of course, is to cross the chasm from the tech enthusiasts and the visionaries over to the pragmatists and the conservatives, the majority, to be mainstream. I present to you, with slightly amended emojis, my version of the fintech adoption lifecycle. So the good news is we have crossed the chasm. Great. And I would venture to guess that the past 18 years has done a huge part in getting us there. We were able to bring a lot of those pragmatists along for the ride for us. So we found that actually using contactless at the shops is pretty convenient. And perhaps issuing a card for a carer was really helpful when taking care of gran or nan. Or we found that using faster payments was not only fast, but reliable. Who would have thunk? But we've only reached, I would say, a part of what Mr. Moore calls the pragmatist. We can't stop there because we don't have them all yet. And we haven't even begun to bring everyone else to the fintech party. And a big problem is who we're building for. So far, in the last decade, fintech has largely been building for a very particular population. And that would be fintech nerds like us in this room, as well as yuppies or young urban professionals, if you're not familiar with the term. And it's pretty easy to build for us because there's a lot of us. We are easy to reach, we are open to trying new things, and we're also willing to pay for our new toys. But not everyone is so easy to reach or easy to build for. This in turn means that not everyone is served. So who exactly is left unserved? Well, some of those people might be lower income people. And actually, if you're lower income, a personal finance management tool might not really help you because actually you know where every single penny is going. And the problem is not where is it going, the problem is we need more. Or it could be that you're on a 0-hour contract and you just need more hours. Then, of course, women are also underserved. Of course, like everything else I'm saying, this is a huge generalization, but women tend to have very complex lives. How do you mean? Well, women tend to live longer than men. That is just a statement of fact, and in the UK, women tend to live 4 years longer than men. But women also tend to disproportionately take on caretaking work, whether that's for children or for other family members. Women also tend to experience the wage gap. Not to mention that women are also spoken to very differently about money than men tend to be spoken to about money. Starling Bank released a report a few years ago called Make Money Equal. And as part of the campaign, they went through and researched how the media speaks to women about money. And in it, they found that men are told to be assertive and to invest and bolster your finances. And women are told to count those pennies, ladies. Or conversely, splurge, treat yourself. Retail therapy, right? So it can be very difficult to build for every single woman in the world. On top of that, there are the elderly and the disabled who not only are financially excluded, but may be digitally excluded. So actually just building an app might not be enough. And if we are building an app, are we building it so that people who are visually impaired can use it? Lots of things to keep in mind. Where you are also matters. So this is going to be a shocker. Not everyone lives in London. Crazy. I do, unfortunately. And so if you are in London building for people who live in London, you lose sight of a majority of the people living in the UK. Where you are also matters in terms of neighborhoods, right? So I recently started traveling around the UK to see different parts of the country while doing research for Bloom. And I would see buses drive by with various fintech advertisements on it. Starling Bank, when the world opens up again, or Tide Banking. And this was around city centers and where you and I might go get a coffee. But then when I went into communities of color, which is the community that Bloom is serving, instead I would find a lot of pawn shops, a lot of betting shops, and oftentimes a lot of payday lenders. So where you are matters. And if you're a woman and you are at home caring for someone and not at work, it might be a bit more difficult to ask people around you, what are the financial services available to me? So where you are matters, which is to say, we do have a ways to go. But don't despair. I have great news. We have spent the last 10 years building products and services which are hugely valuable. They have fundamentally changed the way that we interact with money and where we interact with money. So, Comply Advantage has made it easier than ever to run a PEPs and sanctions check. Onfido has made it easier than ever to verify someone's identity. Banking as a service providers like Modular, who are exhibiting today, or Railsbank, have made it easier to create account ledgers. Stripe has made it easier to take money from anyone all over the world. They have laid down the groundwork for us to build the architecture for the future. They walked so we could run. The next decade of fintech will and should be about serving everyone. And we're already seeing it. Because of the past 10 years, it's been easier than ever for me at Bloom Money to build a proposition that serves a very specific community, which is migrants in the UK. We've been able to focus on serving specific faiths. So we've seen Sharia compliant businesses like Kestrel or Wahed Invest. We've been able to focus on new and interesting problems like a dignified death with companies like Fairwill and Truewill. And we've been able to think about specific communities like focusing on the Black community in America or the LGBT plus community, where the needs of that community are very different than the average person's. And we've been able to think about all of our futures with climate-friendly tech. I'll leave you with this last thought. This is a snapshot from a mural called The Chronicles of San Francisco, my hometown, by the artist JR. Right now, we have accomplished so much, but who we're serving with fintech is just a snapshot. It's just a fraction of who we have left to serve. It would be like looking at this mural, staring at this and going, we've done it, great job, let's all go home. But to do that would be missing out on everyone else there is left to serve, be missing out on the vibrancy of the communities left and the interesting challenges left to solve. And it'd be missing out on the bigger picture. I, for one, look forward to building for that bigger picture, and I hope you will join me in doing so. Thank you. Do I sit? Do I stand?
Yeah, you can sit.
I'll sit.
Sit. Thank you very much, Nina. If you've got any questions for Nina, then when all our speakers have spoken, we'll just basically go to a question and answer session. There'll be live microphones in the room. And I said, if you're watching this virtually, there is an opportunity at the bottom of your screen to put in questions, and Ray will relay those questions to our panelists. Okay. So our next speaker is Zack Anderson, Chief Data and Analytics Officer from NatWest. And I suspect this is the big version of what Nina's just been talking about. So we'll see.
Kind of. Although I have to admit, I'm super happy to be here. This is not only my first conference after a pandemic, but actually it's my first financial conference. I joined NatWest in February of 2020 from a video game company where I'd spent the last 13 years. So I'm not really a banker. I'm not even a finance person. I am, I'd say, a techie and data person. So you'll have to excuse me if I get some of the finance wrong or I don't maybe sound exactly like my banking friends. But what I have seen in this period is a pretty dramatic change. And I think you all have seen it. And I'll just give you a few stats from our own customers at NatWest. So from when I joined the bank to now, we've now achieved 60% of our customers across both the commercial and the retail side using digital only as their service mechanism. I mean, that's a pretty dramatic growth. In the retail space, that's 8 million customers for us using digital. We've also seen a massive reduction in cash, as you'd expect. So cash usage down 20 to 30% across the UK economy among our customers. And what we've seen as we've started to pop out and back and forth between lockdowns is those have held pretty strong, especially the digital usage has held strong. And among customers that we wouldn't normally have seen digital usage among. So elderly, women, a lot of the customers that Nina was talking about have adopted at much higher rates than we'd seen before. It's also forced us as a high street bank to interact in new ways with our customers. And I'd say we had to shift pretty dramatically in a number of big ways really fast. So I'm proud to say that NatWest was the leading bank in delivering of the government loan schemes. We were there on day one. We worked our butts off in the background, setting up the technology and the processes to be able to deliver those schemes. We had over 300,000 applications. You can imagine what the KYC and IDV process looks like for 300,000 applications. We ended up giving out 14.4 billion pounds in government loan schemes in those first few months. Those are now closed. And luckily, we're starting to see really good payback and really good engagement from our customers. On top of that, we had a huge number of mortgage payment holidays, which meant that, most of the time, if somebody wanted a mortgage payment holiday from a high street bank, they pick up the phone and they call their banker or they walk into the branch. Obviously, a lot of people couldn't do that. And we couldn't have processed it if everybody showed up in the first day anyway. We did all of those things by a really aggressive use of bots and digital technology and pushing people online and businesses online to be able to do that. Now, of course, we maintained our branch presence and we maintained our community bankers so that people that couldn't go online could show up and get that. But a lot of our customers could and chose to, and we were able to process those through those really aggressive uses of the technology that we already had in place. NatWest has been a huge user and supporter of APIs across the financial services industry since the regulations came about, but even we've gone way beyond that. And for us internally, to be able to serve the government loan scheme, we use those open banking APIs for ourselves to be able to stand them up really quick and be able to be there on day one. We've also had a massive increase in our use of video banking. So as you would expect, people still need the financial services that we offer. We do almost 12,000 video banking calls a week now across the UK, which is pretty incredible. And you can go to it from our app, which means that more and more people have the ability to talk to a banker. We've turned our community bankers and our branch staff who had to stay home because they couldn't come in into video employees that are able to help people through that. And that's been a pretty amazing thing. I think we'll see that continue to accelerate as we go forward too. The other thing that I think was really interesting, and I had a big part in as an analytics and data leader, was how we had to craft a support for the vulnerable in our society as the pandemic hit. So in particular, getting cash for people who normally use cash became a real problem, especially if you are over 65 and having to isolate. So we used the data that we have on our customers and set up a set of call lists for our community bankers to be able to reach out to vulnerable customers. And we did this in, I think it was the 4th week of March or something like that. And set up a system so that we could see customers that were primarily cash customers and now looked like they were probably isolating, and had the community bankers either call, and then often we sent people to people's homes to give them the cash that they would normally extract from their accounts so that they could pay the people that were coming to their homes, cleaning their house, or doing any other essential needs that they had. Or we sent them cards in the mail and we sent out almost 5 million pounds worth of cash and cards to people during the pandemic to help them when they couldn't come to the bank or come to an ATM. And all of that was driven, in my mind, by the data underneath. So our ability to recognize who was over 65 and isolating. We had a special call line that we created for NHS workers because we knew they were overstaffed and couldn't come into the bank, couldn't call us, didn't have time to manage within the normal business hours of banking their finances. And so we set up a special 24/7 call line for NHS workers. Interestingly, we had to do that by going back and seeing who was getting paid by the NHS so that we could qualify them for that line. So it became a data question to be able to serve the customers. In addition, since we've had all this massive digital uptake, we've started to really ramp up our usage of messaging, which fintechs have been doing for a long time. And to be honest, video games been doing for a long time. So we've launched over 60 messages now that are just designed to help our customers. It really started with things like letting the NHS workers know through an SMS that the line was available, but even going further than that, talking to people and helping them manage their mortgage holidays when they're coming due, but also just saying, hey, look, we see that you've been with your energy provider for 2 years, and when people stay with the same energy provider for 2 years, their bills tend to get higher and they can often save money. And we can see that through our analysis of people's accounts, so we send out messages to say that. Or their MOT bills coming up. You might not have used your car very much in the last year, and you might forget that your MOT is coming up. So we can do those kinds of things that just help people. And what's been amazing to me, because it was a hypothesis I had coming into the industry, that if we helped through digital means, we could really start to build a relationship. And what we've seen is people are interacting at a much higher rate. The bank had relatively low click-through rates on its messages prior to these. But these messages have 10x the click-through rates that a normal kind of bank's email would have had, or a normal SMS email or SMS would have had. And so we're seeing really good engagement from our customers. And I think all of that kind of underlines something that Nina was saying, which I'm a mathematician by training, and so I think of it as heterogeneity. Our customers, we have 16 million customers across NatWest, and you guys have 66 million customers that you're trying to serve in the UK. And the reality is there are a lot of subsegments. And the better that you can really understand and personalize your service for each of those subsegments, to really understand what their needs are, the better you're going to be successful, but also the better we can do for the communities that we serve. And I think you're exactly right. If you try to think of everybody as our friends and the people that use our apps, or even in my old world, play our games, then it's very easy to mislead yourself on what people's real needs and desires are for what they're delivering. And what we've seen is, by having a lot of channels, a lot of ways of interacting and adapting to what our customers actually need, the engagement's gone up massively. I'll end with a call. I think as a data leader, the world that we're moving into is a place of sharing of data. With GDPR and the regulations that we've had, people have been afraid to share, and for good reasons. We've been afraid to give out customer details and things like that, but we have much better tools now to be able to share data, to anonymize, and to be able to empower each other. So we launched an initiative with the Global Open Finance Center of Excellence, where we shared with them a host of data from our customers across the UK at the household level, to be able to help them understand in quick time how the UK economy is evolving as it's coming in and out of lockdowns and moving into a recovery phase. And I think I would just encourage all financial institutions that we can easily share the data that we have for the good of the country, for the good of the communities that we serve. People need to understand how they're coming out. We all know that, whether you call it a K-shaped recovery, or we just say, hey, look, some businesses, some people are doing worse than the overall. We might have a 7% growth rate coming out of the economy, but we know there's a lot of businesses that are still struggling and people that are still struggling. And so being able to really understand that and not get caught in the averages, I think is a particularly important thing for us. I also would say that we need to be able to share the services that we have. And Nina put that out very well. The services that are developing in the fintech space and the big banks are providing through open APIs, I think are incredible. And the more that we can focus on the delivery, the customer value that we really think is important, and not on the back end and back office processes, the better we can get. At NatWest, we have over 700 open APIs on the Bank of APIs website that are available to fintechs. I think we support almost 230 third parties to use those services that the bank provides. And I would just encourage you all, even though you might think of yourselves as competitive with either us or with your peers, the more that we can think about the services that aren't differentiatable, that are just core, and make those available, the better we help the overall community, not just of fintechs, but of the communities we serve. And we spur a level of innovation that I think will be, very similar to maybe the world where I used to live, which is in the video game space, where there is just a massive amount of innovation going on. And I'll end with, I think we all have a real need right now. The biggest challenge that I see inside of our bank is really around the evolving need to track carbon. And to be able to understand it deeply. And there's a lot of effort going on because of the regulations, but also because of our personal values and commitment to climate, that we're all trying to get to that base place of tracking carbon. But the next question that I think is really critical is how, when we remediate, do we measure the remediation? So it's fine to say right now we can all track where we're at, and there are better and worse measures of carbon usage in the economy, depending on what level you're at. But the question for me is, when a farmer switches his crops, or when she starts to use a different type of tractor, or a homeowner puts in a different boiler, but that doesn't change their home CPC rating, how are we going to deal with that? Because those micro changes across the whole economy and across the supply chain are happening right now. And we need to be able to, if we're going to build green bonds, if we're going to be able to build green financial products, we need to think about all of those micro actions in addition. And it's a really interesting, I think, sticky data problem that we as a bank need help with, the sectors need help with, the community needs help with, and frankly, eventually the world will need help with, as they all come to realize that it's not just a tracking issue, it's an analytics and remediation issue. So I give you my big push there of where I think there's opportunity. So thanks. Nice to meet you all.
Some fascinating stuff in amongst that I was unaware of. I must confess, I started off today by saying that it's lovely to see everybody here in person. I haven't been down to this part of Edinburgh in about 18 months, and I noticed a real change. Some areas are doing remarkably well, but I went hunting for a cup of coffee in 3 cafes that aren't there anymore. There's a lot of problems out there at the moment, and fintech may be part of the solution. I don't know. The old saying too that necessity is the mother of invention. Necessity runs a very poor second to global pandemic. There have been huge changes in the last 18 months, largely driven by this. And again, it may be something that you want to ask questions about. If so, the opportunity will be after our next 2 speakers. Sandeep Mishra is Director of FinTech Business Segment, and Akshaya Chandra is Head of Innovation, Growth and Transformation. They're going to work as a tag team today. They're both from TCS, so welcome them to the stage, please.
Good morning, everyone. Super excited to be here. And I should really thank FinTech Scotland for making this a quasi-personal as well as in-person as well as virtual summit, because it's been my first business travel in 17 months. It felt almost alien-like, traveling up and, going for a meal in Disham last night. So what I do in my day job is I head up innovation, growth and transformation for banking financial services sector. What that really means is working with customers and fintech partners in affecting their growth, in affecting their transformation, to be able to help them to serve their customers better. So TCS, we are a tech company. We've been around for 50 plus years. We believe in the purpose of building greater futures through innovation and collective knowledge. We're very proud to be the purpose-led transformation partner for 1,000 plus customers across the globe, 300 plus customers in banking, financial services, and the insurance sector alone. What we have seen in Business 4.0 era, which we are going through now, is most of the leaders in their industry segments are looking towards 4 top behaviors in how they differentiate themselves. One is, and I'm sure Nina and Zack will agree, and they would have seen this. The first one being driving mass personalization. Second one is creating exponential value to their stakeholders, not only customers, and then leveraging ecosystems and embracing risk. What I'll do today is spend the next 5-6 minutes outlining what I see customers in insurance and wealth management embrace these trends and how they're navigating themselves in the business 4.0 era. So businesses often go through a lot of strategic inflection points, and we are going through one presently, which is COVID-19. What happens when we go through each of these inflection points is there is a change in the equilibrium of science, technology, society, education, ethics. So it is very important to understand future scenarios in light of how these forces interact with each other, and also what some of the trends are in each of these forces. So force number one, science and technology, which we all love. That's the first disruptive force. If you look at the top of the curve that you can see on the screen here, cloud has been at the top of all customer enterprises transformation agenda. Cloud is really the instrument with which enterprise agility is being brought about. Now, if you then look at big data and analytics and augmented reality, virtual reality, IoT, drones, 3D printing and blockchain, these are what have become the essential 8 technologies. We see a lot of investments and a lot of innovation happening, not only within ourselves in TCS, also in Fintech and also in our customer space. But to understand how technology is becoming a building block, we should look at what is the job of technology? What is the job that it is meant to be delivering to all of us in today as well as tomorrow? Some of the future scenarios that we are seeing disrupt the industry today, be it's connected everything, right? Connected cars, connected home, connected healthcare, where IoT almost has become a digital spine around which you see all the other essential 8 technologies play a plug and play. Also, the future scenarios are being disrupted and disturbed by a lot of societal factors. The top societal factor that we see today is ESG, which is around doing good for the earth, doing good for the community. It is really disrupting the way business is being done and will be done, rightly so. The second, I think, topmost trend that we see insurers and wealth managers invest in today is well-being, physical, mental, financial well-being, and to get economy back on the track, in a sense. Now, I'll take an example of a future scenario and try and explain how each of these forces are coming together in a customer scenario and where is the part to play for us, what is our opportunity. So if you take an example of the healthy life extension, Nina was talking about how we're all living healthier, longer, yay to that. World Health Organization report says that 60 plus year olds, the percentage is going to be 22% from the current 12% by 2050. Look at the opportunity that it brings to all the insurance customers of ours. And if you look at some of the societal factors in this future scenario that are being disrupted, the top one, I think, is retirement. When we think about retirement, all of our individual retirement plans and ideas are completely different to what our parents used to be. So now you look at how the digital foundation technologies as well as the essential 8 technologies are all coming together to become almost building blocks. You see the connected dots form an ecosystem. This is where most of our customers in insurance and wealth are focusing on. Now, there are 3 important aspects to ecosystem. Cabinet Secretary spoke about collaboration. The 3 important factors are, the first one is macro versus micro. The second one is cooperation versus competition. And the third one is participation versus orchestration. So even from the diagram, it's quite apparent that it's a macro ecosystem. If you take one of the future scenarios like healthy life extension, there are a number of micro ecosystems that contribute to it, like connected health, smart homes, smart cities, and so on. We have been seeing a lot of blurring between industry lines. And we see unlikely companies come together. So I'll take an example of how telephony companies as well as utility companies who have a lot of data from sensors about all of us are coming together with insurers and healthcare providers to actually reimagine this future scenario. And the third one is around participation versus orchestration. All of us, tech companies, fintechs, which are agile-born companies with a lot of innovation, government, public sector, academia, regulators, all of us have a part to play. And all of us need to decide how we participate and how we orchestrate in these ecosystems. What we have done in TCS is since 10 years, if we have decided that if we have to help our customers to fulfill their promises to their customers, we will have to collaborate and co-innovate. This is our framework called as COIN, which we use. It is called as Co-Innovation Network. And you can see how the co-innovation network brings about these three spheres. So academic sphere, where there is a lot of research happening within a lot of universities, within TCS as well. We have 6,000 plus research scientists who do a lot of foundational research. We collaborate with VAT, MIT, Royal College of Arts, and so on. Also, the second sphere is where there is a lot of innovation coming from fintech. We work with 2,400 plus fintechs across the globe. And we work with fintechs in very interesting ways because of the deep-seated contextual knowledge we have about our customers' wants and needs and opportunities. And also because we work with startups and we understand where the innovation is happening, we very easily can become a gel which can bring the opportunities from fintech and our customers to each other. We also co-create a lot of propositions along with fintech, and there's a lot of ecosystems that we currently are working. Sustainability is a big one. ESG reporting is another one. Greening of IT is another ecosystem. Retirement ecosystem, care tech and med tech. How do we nudge customers to save more and to plan their retirement better? So these are some of the ecosystems where we are actively working with fintech, with academia, with foundational sciences like behavioral sciences and so on. So I will only end with saying that collaboration is the future. And we in TCS believe in collective heroism. I think it is perhaps time for us to stop thinking outside the box, but to remove the box. Thank you.
Thank you.
Good morning. I'm Sandeep Mishra, Director of Fintech Business Segment in Banking and Financial Services, TCS UK. Really excited to be here. Physically after 18 months, and hope I'm not talking on mute. So, see, pandemic has impacted all of us, and we adopted the new ways of working and living the life. So today I'm going to talk about the banking and financial services trends, how fintech is supporting this, and how TCS is collaborating with fintechs to bring value for our customers. With that, in recent time, we have seen that technology has changed the way we used to do the banking, and pandemic has accelerated that journey in last 18 months. And one more thing is that now technology is taking the precedence in that space. So if you look at the banking trends, more and more banks are adopting the technology, and technology is driving that banks. And fintech is playing the key role in that journey. Financial organizations are different financial organizations are in different stages in this journey. But there is a common phenomena that we observed in the financial services, that customer focus and customer experience is a key. And from that perspective, these financial organizations are adopting the transforming their digital channels or enabling the new digital channels. And also, better services, new products are being launched for the customers. And from that perspective, they're also transforming their payment systems or ensuring that the customer data is safe in that journey. So keeping that in mind, I'll go to the next slide. Digital disruption is kind of key now. It is not a buzzword. And key thing that we have done is that we build that ecosystem. We have got our own foundation layer, we have got our own innovation lab, and we have a Quint ecosystem. And this ecosystem is addressing the customer challenges. So if you look at it, this ecosystem is helping our customer in co-create, co-innovate, and also solving the business challenges. This is also helping our fintech partners in this journey, because fintech partners, we are providing a platform to work with us in a co-innovation network, and also co-create, co-innovate with them. And once we feel that this offering is good enough to take it to the customer, we take it to our existing customers. So it is basically a joy, working together, collaborate, and take it to the next level. Along with the business, fintech partners and academia and all, we created offerings and which are addressing the current and the future business challenges. I'll briefly talk about that. Some of those offerings in mortgage and sales and origination cycle, we have created an offering along with our fintech partners, which can reduce that mortgage offering to the 1 day. Similarly, on the payment space, we have created an offering which basically make it to the faster payment for our customers. And also in the, we built an offering on the other part of it, in the sustainability on ESG side of it. We have built an offering in the ecosystem side of it, and we have built the offering for in some of the other areas. And these offerings are, we are actually talking to the our potential customer, existing customer, and taking to the, along with our fintech partner, taking it to the next level. See, I'll briefly talk about that. Fintechs are helping and building the partnership with us in solving some of these challenges. And fintech will be contributing in the future banking as well. And we see a great potential of the fintech in the future banking, because we have seen this pandemic, we have seen the challenges in the pandemic, and we understand that what are the challenges that is coming in the future, and we need to address these challenges now so that we don't face the same kind of challenges that we saw in last 18 months. Some of those challenges are like autonomous banking. It means that we need to automate the complete process, make it paperless, think from the end-to-end customer journey perspective, and then solve that and work with the partner to solve that challenge. Another thing is that cognitive enterprise, it means that we need to make our support system, our employees ready with the technology so they can leverage the technology and solve the customer problem, support the customer in the journey. Another thing is that purpose-driven ecosystem, which means that we need to leverage the ecosystem in such a way that it is not just restricted to the day-to-day banking. It goes beyond that. It connects with the marketplace. It actually look at the problem holistically and address that challenge. We need to build a new product, a new reality product, so that we are ready from the future perspective. We have seen the challenges when we struggled initially when the pandemic started last year in the month of March and subsequent period. So we need to think, and in this phase, we understand and realize that what is coming and what kind of challenges we can face this next 12 months or in subsequent years. So we need to build the product now to address those challenges. We need to ensure that we build the contactless experience from end-to-end perspective, and so that we are future ready. Resiliency is a key for any system. So we need to make sure that in such cases, if situation arises, system is resilient enough so that it can face those kind of challenges. Another thing is that adoption distribution, which means that we need to, in case of surge in the request or from the customer request, there is a peaks and drops. The system should be able to manage that peaks and drops. And from that perspective, we need to ready now and ensure the system is ready from that perspective. So keeping that in mind, these are the 7 key elements that is needed from future banking perspective. And I see a great potential of collaborating with FinTech in achieving these objectives and make the banking ready for the future. Thank you.
Thank you. Just to explain, Nina hasn't bottled it. Something's come up and she's had to nip out. I'm hopeful it should be coming back in again, but I can't guarantee it. So now is an opportunity to ask questions of any of our panelists here at the top table at the moment. We do have microphones roving the room. So has anybody got a question for it right from the start? Well, we'll get a microphone right to the front here, please. And then I'll come to you. Okay. All right, there we go.
Hi, I'm Deepak Kohl from Tata Consultancy Services. I would like to ask a question to Zack. Zack, first of all, it's quite interesting to know that you have moved from EA, like a video game company, to a bank. So it must be an interesting journey for you, that too in the times of COVID. You may not have even met your colleagues so far. So, but kudos to your resilience and the way you have been managing the COVID loans, etc. So kudos to you for that. My question is about the data. We know that when we are focusing a lot on ESG, so from the governance aspect of it, we need more data, consumption of more data to ensure the better governance processes. But then there is also an aspect that when we are looking at huge chunks of data to manage it, to process it, we are also going to utilize a lot of energy consumption is going to take place on that, which is actually that we are trying to minimize the energy consumption. So from the data management point of view, what do you think is the way further? How do we strike the balance and what should be the priorities for a CDO?
Yeah, I mean, it's a great question. Yeah, it's been, I'll start with, it's been an interesting year to move across the world and join a new industry and not meet anybody. So that's been a fun journey. But actually lovely in many ways. The bank is NatWest and RBS are an incredibly just good group of people that I've interacted with. So they've made it pretty easy. I think the interesting question that you ask is around compute essentially, and compute takes energy, and energy is part of what we're fighting against in the climate battle. At NatWest, we've done a lot of work to make ourselves net zero already. And working very hard to reduce that. So I think the question is going to be, how can we find ways to try to, with the major cloud providers, which is where we're consolidating, to try to reduce that. And I'd say some of them are, I won't name names, but some of them are doing better than others right now. And so I think you start to not just, when when you choose a cloud provider, you often think about the native software that they have, the pricing that they give you. And I think increasingly we have to start asking ourselves, what does their supply chain look like? How energy efficient are their data centers? What energy providers are they using? How are they investing in energy providers that are like wind and or that are non-polluting? And if they're doing those things in big ways, I think that becomes a really big choice for us, at least at NatWest, in which ones we choose and how much we use them. I think the underlying question is, how do you decrease your compute usage, which has cost implications and is good actually for the cost-wise, but it's hard because we are all increasing. I mean, just all the processes that we're digitizing in the bank are using compute. Now, I think you can't necessarily look at that absent of what the process was before. So using a digital process to be able to do IDV versus 20 people doing it, and all of the usage of carbon that they had to keep the lights on in the building, to go back and forth to work, all of those kinds of things I think can have impacts. So it's not a simple question. I think all of these carbon remediation questions are actually much more complex than we like to think about them at the first level. And that becomes a great data challenge, I think, is how do we really think about the processes themselves and how much they're using now, how much they use in a new way, how can we reduce the new way, what can we do to change it? But I mean, you're actually asking a question about all of human existence at this point. How much carbon are we using by ordering everything off of Amazon versus going to your local store and buying it on foot or something like that, or unless you drive a big SUV or something like that. In the States, you drive 10 miles in a Suburban to pick up your groceries. It might be cheaper to have it delivered through Amazon. I don't know.
Okay, thank you for that. Okay, there was a question here. Second row, please.
Hi there. Is that working?
Yep, that's fine.
Sorry, I go here. So I'm Fiona Reid from Lloyds Banking Group. I'm a data scientist there. I've basically got a techie question for you, which you may or may not be able to answer, Zach.
Sure.
It was basically, you're talking about sharing data and anonymizing that data so that you could share it between organizations. Can you say anything about how you actually do that? Because it's a pretty challenging problem, having played around with it a bit myself.
Yeah, I mean, I think we're on the edge of the synthetic data movement, where we can really take all the attributes of a set of data and make it synthetic. But I don't think that's real yet. I think the best way we're doing it right now is to really extract just the data elements that are necessary for the analysis that's being done, and then sweep the rest of it under the rug and not give it out. So I mean, I wish there was a really sexy solution to that right now, but we're getting better and better at it. I think it's just careful work right now to make sure that you're giving, like with our work with GovCo, obviously we had to go through a lot of checks and controls to make sure that you couldn't de-anonymize it, or you couldn't put people's names and addresses back on it somehow.
It's part of the problem here that as a species, we're actually very good at spotting patterns.
That's right. And the computers that we've now ramped up with machine learning are even better at spotting. I think that's the issue. So I think you just have to really make it, work hard to make it anonymized. But then the problem is that limits the analytics that can be done with it. So that's the trade-off right now. But
you lived in hope, you tried, but never mind. Thank you very much for that. There's a question here anyway? Right, third row back, please. Again, if you could identify yourself, please, sir.
All right, no problem. Hi there, it's Adrian Sargent here. I'm CEO of Castle Community Bank, so a small local credit union. One of the things that we grapple with is financial exclusion and technology exclusion. So as we're all going away from branches and we're trying to serve those that are financially vulnerable, socially vulnerable, how do we get tech there if people can't actually afford the tech or can't use the tech? So what's I kind of am grappling with this myself, because we've got quite a good outsourced provider, Fintech. But how do we serve those that are excluded there? And then I've got a separate question, because I've also got sort of some ESG interests as well. So from a NatWest perspective, and perhaps a Lloyd perspective later on as well, when you're looking at the impact of NatWest, it's all very well and good what you're doing as a business internally, but what's the impact of your lending? How are you assessing the physical risk impacts, the transition risks impact there as well, and all your scope 3 emissions, so the lending that you're doing. So what's the data issues you've got there? And we can chat later as well, because I co-founded a green risk-weighted assets association that we've got a formula there to try and do that for banking as well, which is quite an interesting. So there's a few questions there.
Yeah.
Take them in the order that you wish.
Okay, can I just say, well, we'll take the second one second, logically enough.
Yeah.
But, that first question, Sandy, do you want to say anything on that?
Sorry, I missed the question. What is it?
Sorry, could you repeat the first question, please? Just, I don't know why he's sitting back down. Bring the microphone back up here.
Maybe I can summarize for you. It was a question on how to deal with exclusion caused by technical or digital exclusion. So vulnerable customers that need banking services but can't access the digital tools that we're building.
Yeah. No, actually, if you look at the traditional bank, they were not able to reach out to the large portion of the kind of unbanked customer, which is more than 1 billion in the globally. And so I think this financial fintech or financial technologies, they are enabling that option by peer-to-peer banking and some of these things. And also, and this has actually increased because the lockdown and all those things had also accelerated that thing. So in my view, the financial technology, even though mobiles are mostly reachable to the people, it is reaching out to the things. Now banks is coming into the mobile, and peer-to-peer technologies are enabling that option so that people can, it's a peer-to-peer lending kind of option or crowdfunding kind of option. All those things this evolution is helping to reach out to the unbanked customer and gradually spreading. So that's the way I see it, that the fintech is helping in that space.
Before we get to the second question, anything you want to add to it?
Yeah, I mean, the way that I think about it is it kind of goes back to that concept of heterogeneity that I was talking about. There are a lot of mechanisms for exclusion from digital, whether that's visual impairment or even color blindness. Sometimes the apps and things we build are cruddy UX experiences for people with color blindness. Or like me, I'm quite dyslexic, so long number strings get mixed up in my head. And so like having to put in a 7-digit access code is kind of a pain in the neck because I have to do it 2 or 3 or 4 times. I mean, those are mild forms of exclusion. There is obviously the economic exclusion. So to me, to drive digital adoption and the spread of our products and really to service the world, the communities that we service as a universal bank, I think we have to just tick off all those things and keep going down the lines. And I think for us, we do a lot with education. So trying to utilize our branch staff to try to train people to be able to use the tools that are available. But there's also little things like, I mean, the challenges of keeping your app up to date with the new iOS that then takes more compute than is available in an old phone. So you start to like exclude people economically because they have to have a new phone to be able to operate your app because you've updated it in certain ways. Looking at your update cycles so that your app will run on older operating systems and lower powered phones is a small thing, but has a huge impact because old phones you can get for quite cheap if people want to use them. But then when we upgrade to the newest thing because we want it to be really slick, then we start to exclude people. And so I think those kinds of things, those little micro actions are how we slim it down. And then somewhere we're going to have to talk to Kate and the government and start to think about how we start to bridge the digital divide, which will have to be a public-private kind of partnership, I think, to be able to do that. And we're seeing some of those things happening, but probably not at the scale that I would hope we can get to. So that's my long answer to a short question.
And the second question, which was basically, how do you assess the impact of your lending? How do you?
Yeah, I mean, we're doing a lot of work on that. I mean, as you know, the regulatory environment on stress testing our book is requiring us to assess the impact of our lending. We've made quite publicly commitments around the reduction of the impact of our lending book as a bank in the UK, and are one of the COP sponsor groups to be able to cut overall production. And so, I mean, I encourage you to go on and look at Allison's statements around that, but we're being quite aggressive. Now, the part that you raise, I think, is the really interesting one, and from an analytics perspective, which is how do we then like look at where we're loaning people money, especially for remediation or for carbon reduction? How do we measure it? How do we verify it? You know, how do we think about those things? And I think the whole industry is not quite as, I mean, we're all assessing it and we can all put a number against it. Now, I think the question is, how big and how small can we get? How detailed can we get? And how do we build those into the book? And how do we make sure that whatever that remediation is that you funded happens and then is used over the long period of time and doesn't revert? Like, you know, I mean, we can make a loan to switch crops to a lower carbon impact crop, but you know, then they can go back the next year because they didn't get a good price and the new crop has a higher price. And so the 20-year impact of that loan, the loan now lasts longer than the actual impact of the crop impact. So those kinds of things, I think we're going to have to all try to figure out how to assess. And it's not like I want to send community bankers out to check crops and see if the farmer actually kept planting the same crop every day. And I'm sure you don't either. So those kinds of things, I think we're having to work on a lot.
I'm very conscious of my behavior changing enormously over the last 18 months. I hated contactless payment. I just didn't like it as a principle, and I do it now without even thinking about it. There's heaps of stuff that I do now. I mean, there's several presentations this morning that have clearly indicated how much we have come on in that 18 months. I mean, it's been a real hothouse. Put this question to you first, Akshaya. How much of the changes that you have introduced over the last 18 months have actually been stuff that you've wanted to do for years, but all of a sudden the public have gone, yeah, okay, we'll play the game?
Absolutely. I think one of the flip sides, a really positive side of coming out of the pandemic is that it has accelerated digital adoption. So one of the innovations, I'll give an example, which is probably even relevant to the question earlier asked about exclusivity. One of the innovations we had in the education sector was we as an organization onboard a lot of people. So we have 500,000 of us. And so you can imagine how many people we keep recruiting, and we do it all remotely. So all the interviews happen over a video conference call, and we have a platform called ION over which all of these happen. Obviously, because you don't know the prospective candidate, so you don't know their Skype ID, Zoom ID. You know, they may or may not have the same software. They may not have smartphones. That sort of scenario. When we realized that Equity Release Council, in terms of reverse mortgages, lifetime mortgages in the UK parlance, when they said during lockdown that remote advisory is okay, then we immediately thought of this customer journey and then tried to copy paste it into the new scenario, because in terms of exclusivity, although it doesn't solve the differently abled exclusivity and so on, but it definitely solved the problem of, if you look at reverse mortgage cohort, they tend to be elderly. They are not particularly the set of people that you can say download a Zoom app or a Sky app and create an ID. Right. So this piece of software that we already had is quite nimble. So the advisor can just send an SMS, which is pre-authenticated to the number. So you click on a tiny URL which comes in the SMS, and then you can actually do a video call and talk to the advisor. And also we integrated CRM system with it. So it was literally in the matter of 3 weeks that we were able to create an MVP, and we took it to one of our customers, and they really liked it. And within end to end 5 weeks, it was productionized. Yeah. So there are two learnings here. One is cross-industry learning and leverage, which I don't think we would ever have been forced to look at the recruitment scenario to apply into reverse mortgage scenario, but that's what lockdown did.
Okay. Any thoughts on this, Zack?
I mean, I agree with you. I mean, both of the, there's been, there's certainly things that have evolved more quickly than anybody thought and are in line with the trends. I mean, cash reduction was happening before the pandemic. Digital adoption was increasing before the pandemic. They just rocketed forward.
Yeah.
I think what's fun to me is the examples of things that we never thought we'd be doing. The C-bills and government lending schemes that I mentioned before, we used a bunch of internal technology that had already been developed, but never put together to build an entire lending journey. And, they were still changing the terms of those loans the weekend before they went live. So the ability for us to be able to bring that to market was a combination of assets that we already had that we had never used in that way before. I mean, if you think about how long a bank normally takes to bring a product to market, a lending product to market, it's a lot longer than a couple of weeks. And so those things I think are amazing. And I mean, our sincere hope inside the bank is that we don't go back to the length of those. We'll bring products to market much, much faster now because we've proved how we can do that in a controlled, safe manner. And I think that's just, it's kind of woken everybody up to the potential of what can be done, which is unexpected, I think, and at the paces that things can be done. I think that's the big surprise, I think.
I've heard that phrase, Sandeep, umpteen different times in umpteen different contexts. Let's not go back to the way we were doing things before. It's highly unlikely we're ever going to do that.
Yeah, I think this actually has given us an opportunity to also to move forward and take this as an option to adopt more and more digital and also enhance that inclusivity and engage the unbanked people in this whole life cycle. So I think it's there's a pros and cons. We had hardship of this 18 months, but it actually opens a lot of opportunity from the future perspective. And I'm sure that a lot of innovation will see that, and people can now start thinking about the futuristic problems and start realizing it and trying to create a solution now, or thinking in that direction at least. So I think that's one of the positive side of it.
Yeah. One of the things. Sorry, I'm getting caught up myself. Any questions from the floor? Gentleman there.
It's a journalist.
Yeah, I know. Can't help it. Entirely my fault. My apologies. Right, fourth row back. There you go. Keep going.
But I'm used to it. My wife is a reformed journalist, so
all right,
she can really lay into me.
All right, fine. She's gone straight now.
Yeah.
Excellent.
Question to the whole panel. Hi, my name is Khaled Al-Hashsain. I work in NatWest Wealth Business, Coots. So hi. The question is, typically and historically, we've been using cost and benefits to help consumers to make a decision or support make a decision on a product or service. Now with the ESG agenda increasing, how are we thinking of supporting the customers and making it easier for them to understand the impact of our products, of our services, who we use? Is there any thoughts have been thought about how do we measure and how do we communicate that?
Yeah, Akshaya.
Yeah, so in fact, very opportunistically to answer your question, a few days ago, we were talking to one of our academic partners and also a fintech who are doing exactly this. So all of us save money, be it ISAs, be it pensions, be it annuities, and our money is reinvested. It could be reinvested in Syria, it could be reinvested into British gas or into something very purposeful. So there are two sort of trends that we are seeing. So this particular conversation that I am quoting is wanting to solve the transparency of that asset investment. So can I, as a pensioner and a savings account holder, have a dashboard access to understand that the £10 that I have invested with NatWest, for example, is reinvested in 3 funds, and can I have an ability to influence the bank's decision on where I want those funds to be invested? Because say I want the funds to be invested in girl funds, which increase sanitation in some countries and so on. That is the first thing that these organizations are thinking about. The second thing that they're thinking about is almost an activism, where, when the investment managers do their proxy voting and shareholder voting, can the retail customers have the ability to influence that voting? Can you and I, as NatWest account holders, be able to voice an opinion that then informs the investment arm of NatWest to participate in this voting in a particular order? And what if the voting doesn't happen? So these are definite trends that are happening. And one of the questions I asked them was, isn't it breeding a sort of unnecessary activism, right? What if majority people want their funds to be invested in one or the other? How will the investment decisioning then get impacted? So that is a gray area which they are working on. Now, the second trend that we are also seeing is purpose-led or ESG-led propositions, where products themselves are being designed in such a way that they could be LGBTQ, propositions. In the back end, the funds are reinvested in these kind of organizations. So that is another trend that we see most of the providers are looking for.
Okay, we have a couple of questions from virtual delegates. Ray?
Yeah, thanks, Mark. Simon Elliott from HSBC has asked, with the innovations of computers, we were told these would lead to more leisure time. I have not seen that. Do you think that fintech can then bridge that gap to allow us that free time or reduction in the working week?
I'm certainly sure that I'm on Zoom, which feels like more than I used to be in the office. And I suspect that's true of everybody. So I'm not sure it's, even though we have now completely digitally adopted working, or at least we have in the last few months, or 18 months, I'm not sure it's given me much more leisure time. Although it does enable me to walk out at lunch and see my son, which is kind of nice and didn't used to happen. So I won't take on the societal issue of how we use the efficiencies from computers. I think I'll leave that to a greater brain than mine. But
also, that doesn't tend to be a technology problem, does it?
Yeah, precisely. Second question, Ray.
Yeah, this one's from Stephen Hart. It was actually for Nina, but I think it relates to the rest of the panel. Do we bring digital financial services to non-traditional communities, or is there scope to bring non-traditional financial services to digital?
I think if the question is, do we have to adapt our services, our digital services that we're moving towards, to be non-digital for the communities that we serve? And certainly that's part of what we're doing. So the community banker programs are around putting people on the street in the right places to go meet with customers that are not digitally active or unable to leave their house in the case of over 65s who are isolating. And I think we also have to do the opposite, which is we have to help those communities become digital and become comfortable with digital applications and tools. And we invest a ton in education around that. And like I said before, use our branch staff, which is the bulk of our frontline staff, to try to educate people as they come into the branch. You could have done this online from your home as opposed to walking into the branch and talking to us.
I think, being an Indian, I can say from India that both of those are brilliantly done in India.
Yeah. I think we need a right mix of digital and human touch, and the community who need that assistance. So we need to have an assisted journey and then a digital enabled wherever it's possible. So the right mix is needed.
Yeah. I suspect that I sit very firmly in the skeptics section of the curve, because I've banked with the Royal Bank of Scotland since I was a teenager, and the Inverurie branch, they kept on saying, "Oh, but you can use this machine." I thought, I don't want to use the bloody machine, because if I use a machine, the person behind the desk will be out of a job in 5 years' time. Yeah. So that's a real impediment.
Yeah. there's a couple questions embedded in your statement there. I think there are definitely skeptics out there, and I think we have to be able to, as a universal bank, we have to be able to provide service to everybody that shows up, whether they're a skeptic or not. I think we also are. You're obviously, the implication of some of those is that you do change the job mix of the economy as you go forward, and I think we have it as a goal for our bank to be able to upskill people and give them the capabilities to be, a data scientist if they were working in the front line. And we invest a lot in that. So I don't think you necessarily have to lose your job if you leave the branch. You can take on some new roles and go to work for one of the great fintechs that's in the room. Now that's not everybody, so we have to manage those things carefully. But again, it's a set of trade-offs, and usually I find they're not either ors. They're kind of support everybody in the best way that you can. That means in-person, digitally, telephony, video if video is necessary. And I think there's a real fear from people like you, maybe, and I won't speak for you, but I'm curious if this is how you feel, of the kind of dehumanization of just having a digital interaction. There's, when we called people during COVID, especially over 65s who were isolating, some of them just wanted to have a conversation with a person because they weren't having a lot of conversations. They used to go to the bank branch and talk to somebody. And I think that's one of the things that, coming from the video game space, I'm not so worried about dehumanization, but I think in the banking space, we have to worry about that. People want to interact and have a trust and interaction, and banking provides that in many cases. And so we need to try to find ways to be able to facilitate that human interaction in ways that fit the modern world. And our goal as a bank is to be a relationship bank for a digital world. And that means actually maintaining those human-to-human relationships and using the digital tools that we have to do that.
Okay. Thank you very much for that. Just actually, Ray, time-wise, I think we probably don't have enough time for it, but thank you anyway. Thank you for the questions. Apologies if I hogged it there and you didn't get a chance to ask your question. There will be other sessions throughout the rest of the day. We're going to break just now, but can I ask you first just to thank the three speakers we have on the stage at the moment, and Nina and Absentia. Refreshments are going to be served in the stratosphere upstairs behind the registration desk. Please, if you can, take the time to visit the exhibition stands. The next session will start at 11:30. They're going to be run as breakouts. If obviously you're here, your breakouts are noted on the back of your badge. Lunch will then be served at 20 to 1 in the stratosphere, and the final session of the day will begin here at 1:30 right here. Can I just remind you, if you're moving about, masks on. Please respect folk wearing red and orange lanyards. Greenies, let the hugging commence. Crack on. Right, okay, thank you.